Before we get started, I want you to note that all of our attendees are placed in mute mode to ensure a quality recording, which will be made available to members with the slides following the webinar. If you have questions or comments during the program, we encourage you to use the Q&A field at the bottom of your screen and not the chat field. The Q&A field allows us to mark those questions answered and make sure every question gets addressed. If you are not familiar with Zoom, you can adjust your slides and the speaker view after the screen is shared, and then select drop down view options, and you'll want to select side-by-side mode. I can show you really quickly here what that looks like. Once the screen is shared, you're going to see a green bar at the top that says view options, and then you're going to drop down almost to the bottom, second to the left, and it says side-by-side mode. Then there is a bar in between that allows you to resize the speaker compared to the slides. That's the recommendation that we have for you for the best presentation. Without further delay, I'm going to turn it over to Steve Bonoff with our sister affiliate, PIM, to the north of Mid-America, because this is a shared program between both affiliates. Good morning, Steve.
Good morning, Teresa. Nice to see you again. And welcome, everyone. This is, for the PIM Printing Industry Midwest, our Financial Executives Council. We've been doing the Financial Executives Council for some time now, and it has become most important during this time of the pandemic and all of the loan ramifications that have come with this pandemic. And we have had a stellar team in partnership with our associate member, LB Carlson. And so we're welcoming them again here today in another of a series of PPP related webinars. But keep in mind, this is the Financial Executive Council, although we have obviously common interests along with our friends down south at the PIM Mid-America. Well, we also do have other meetings that we do periodically on our own. So, and this is one of obviously many benefits of membership. So if you have interest in joining and you're not a member, know that this is just one of many things that we offer at PIM and at PIM Mid-America. Want to again welcome everyone, and I want to thank our stellar panel and leaders at LB Carlson for the work that they've been doing, and want to turn it over to their president, Mel Enger, who is going to introduce his team.
Thanks, Steve. Had to unmute myself there. Yeah, welcome everybody. I'm Mel Enger with LB Carlson, is also co-chair of the Financial Executive Council for PIM, and great to be here again. I'm glad Steve and Teresa asked us to participate. We've done a number of these since COVID started on the PPP loans, from the beginning with the applications to now we're on to forgiveness. Just a reminder, our Financial Executive Council, Steve referred to it earlier. We've been doing this for a few years now, a couple of years at least, and a number of different topics. Lately, it's been COVID related, but we hope to get back to other pertinent topics down the road, and I'm sure everybody will be notified through Teresa or Steve for those upcoming events. Teresa mentioned the questions, so yeah, chat those in. Our panel members, we will try to address those throughout. We probably won't interrupt the presentation to address too many. If we do have time at the end, we'll go through those. We do have a stop time at around 1 o'clock. But if we don't get to your questions today, we will be following up and sending back our responses through Steve and Teresa, and you'll have access to all those responses in a short time here. So with that said, I'm gonna turn it over and to our speakers today and partners of mine, all from LB Carlson. We have Rick Riesgraff. He's going to be talking about some key considerations in the forgiveness. Then Dan Locke is going to be covering the different forgiveness application forms themselves. And then Darren Cray is going to be going through a detailed example of filling out the forms and the different aspects of that. So with that said, I think, Rick, you're first up, and I'll turn it over to you.
Thanks, Mel. And Mel, you just said chat in your questions, but Teresa wants to use the Q&A, so don't use the chat.
Oh, sorry. Okay.
No problem.
Thanks, Rick.
As we mentioned, this is been a series of webinars that we've done in the summer and fall. I think we did 9 or 10 before this on the PPP loans. It's been a very confusing journey at times as things got clarified and consequences and were determined, those types of things. But so certainly after all that content, we can't review all that today, and we don't intend to do that. But there are a lot of things that are in the PPP that might affect your forgiveness. So if we have missed something in this presentation, feel free to ask any questions afterwards, or email us, or whatever you need to do to connect with us afterwards. Just wanted to do the quick overview of the PPP loans. I think everybody knows that they were created as an incentive to keep jobs primarily, and also to help small business under the CARES Act when this coronavirus pandemic hit and the economy got shut down. The program has been wildly popular. There's over 5 million loans were made, and there's about 525 billion was loaned out of the 639 that was 39 billion that was authorized. I can speak for the clients that we have in our firm who speak highly of this program, in that it did indeed allow them to survive some very, very difficult months. And so from that standpoint, it's been a good program. At the beginning of the program, each borrower was to review their anticipated needs or concerns or the disaster that was they were looking at going forward. And if they had that need and could feel that they could demonstrate that, they were able to get that loan. There wasn't a lot of requirements in the application process, but now we're kind of through all that. We've gone through things that we'll talk about, covered periods and that type of thing, but we're kind of, for most borrowers, we're nearing the forgiveness stage. Whether we're going to dive into that right now or the weeks ahead or the months ahead will depend on your circumstances, but that's where we are now. And so I just want to make sure that as we talk about this forgiveness, we're going to talk about some aspects of it, but each individual circumstance is, of course, going to be dictated on how you approach the forgiveness process. The official PPP law was done almost in less than a few days at Congress, and it was hastily written and it was confusing. And I remember the bill when it first came out, it was very, very overwhelming. And since then, the Treasury and the SBA have been tasked with trying to write what they think Congress intended on some of these things, and sometimes they've got it right, sometimes they haven't. So it's been a very confusing journey, as I mentioned, and some of the uncertainty and changes are demonstrated in the process itself. There's been over 18 pages of frequently asked questions and then answers to those questions. There have been 30 different multiple interim final rules, and then final rules to interim final rules and things like that they're just overwhelming. There's a dozen different authoritative notices and forms that have gone to the lenders in the program, and of course there's 3 different borrower forgiveness applications out there, not just one, there's 3, and Dan's going to talk about those. And so it's a wonder that that anybody's going to get this forgiveness process right, but I think if we're careful, we're all going to do that. And so, but there is a lot to pay attention to. So we just have to be careful as we move forward. So as you determine if you're ready for forgiveness. One of the things that we're going to look at is, you know, are we done? Are we through our covered period? And are we ready to move on to that next step? And speaking from my experience in the last weeks with our clients, a lot of borrowers are ready to go or getting ready to go on that journey. And I spent some time with a banker over the weekend, and they have seen their customer base really start to engage this process, and they're starting to submit to SBA, and they're actually getting some applications forgiven back from the SBA already. So it might be time to take off on that journey. In our presentation today, like Mel said, I'm going to cover some key influencers to the application process. And Dan's going to talk about the applications, and Darren will go through an example. So as we go into some of the factors influencing the application, we just pick some of the key things to talk about, but there's many other issues. So just let us know in your Q&A if you have any more things that we should be talking about, if not now, later. First thing I want to talk about is the deadline. A little bit of fake news was in here. If you all have looked at the application itself themselves, they have a 10/31/2020 date on them. So at first, a lot of people thought that was the deadline for the application. That's not true. That date has to do with the Paperwork Reduction Act, and so I don't really know what it means, but it was supposed to be taken off the form, and they missed it in their haste. So this has nothing to do with the application, but just as far as the deadline actually goes, there's really no urgency to this, but that application for forgiveness can be made at any time prior to the payback period and your loan being over. So it could be up to 5 years from now, in some cases where that deadline or that forgiveness could be submitted. I doubt that's going to happen. I really do, but I think generally people are focusing on the 10-month period after the covered period, because what happens after the 10th month after the covered period, if you haven't been forgiven, you actually have to start making payments on the loan. And so we want to back that process up and go, practically speaking, that means that you probably will want to get at this in the next 5 months from now, and I'll talk about why in a minute. So even though there's no urgency, we're starting to get to the point where the applications are being pulled together, getting ready to go, and so we can get going in the next few months here, if not now. So as we talk about the covered period, which we've dealt with in many different webinars in the past on PPP, just a reminder that the initial PPP covered period was an 8-week period. They extended it with the Flexibility Act in June to 24 weeks, and that has dramatically changed the game in the forgiveness process. Has huge implications in increasing the amount forgiven, and Darren will demonstrate that in the application example he's got. But just wanted to point out, most people have opted now, not all, but most people have opted for that 24-week period. And if you haven't pulled up your stuff and looked at it, that change from 8 to 24 has increased your forgiveness a lot. And so you may want to take a look at that to know where you stand if you haven't done that already. Having said that, about the deadlines and the covered period, you can apply early. The criteria for that, there is none, other than that you would want to be sure that you're going to be 100% forgiven based on what you've spent on qualified expenses, and that the application points to that. So you can apply before your covered period is up. Most people have a covered period that's expired now, but we have a few clients that aren't done yet. But if they're forgiven, they could apply early, and it's something you may want to do. The only thing to be aware of, if you have an FTE reduction or a 25% wage reduction and you apply early, you do have to wait and look at the full 24-week period to determine the full impact of those FTEs and wage reductions. So it's just a caveat. I have had a client say, I want to apply now, and they started to. So they're going to do it before the end of the recovery period. Tax consequences. One of the unfortunate effects or impacts of the PPP loan is that the IRS has made it known that they intend the PPP loan in effect to be taxable. What the way they're going to do that is the income will be tax-free, but they're not going to allow the deductions against the income. So in effect, the loan amount that's forgiven ends up being taxable. Our firm, and I think our industry, is supporting that position for now, because that's what's been publicized, but you just have to know there's been absolutely no guidance coming from the IRS on how or when to report that income right now. I think they're in a wait and see mode like a lot of other people still yet. So we haven't seen anything on how this is going to work out. But one thing to note in the tax considerations is each individual borrower's tax situation is likely different. And depending on when you submit the forgiveness application and how that income is being reported on the tax return, your forgiveness process itself could influence when the taxable impact of this hits your tax return. And in some cases, some people might want it in 2020 and some people might want it in 2021 or something else. And so you have to work really closely with your professionals on this in terms of the timing of reporting that income and the planning that you need to do on this. And another thing to note on this is the House and the Senate both have strong contingents that are lobbying and have lobbied for months to make the law permanent that this indeed is going to be a tax-free loan. So there is still a possibility that Congress may act on that. Our profession, the AICPA, is lobbying, as well as many other associations across the country are lobbying Congress to come through with that, just given the ongoing impact of the pandemic and the impact it's having on the economy. But the stalemate that has happened, obviously, with the run-up to the election, and the stalemate that continues with the post-election stuff that's going on, has just really stymied any decision or discussion on this. And so, unfortunately, we can't report anything, but it's something you definitely want to be aware of before you submit that application and be kind of planning where you're going to have that tax impact hit, which year, that type of thing. So, as I mentioned earlier, the application or the uncertainties that have faced this process has been many. One of the things that is standing out to me, and I want to mention it, is when they changed the application itself back in the end of June with the Flexibility Act. The application took into account this 24-week period, which I talked about. And many CPAs and lenders are still not even sure if this application matches the intent of the law, because the Flexibility Act did intend to give you more weeks to spend the loan money and have it qualified for forgiveness. But as far as we were anticipating, if you had an FTE reduction, you still had to take that into account when you ultimately determined how much of the loan would be forgiven. The new form, as Darren will go through, looks and is designed so that in effect you may not have to take a FTE reduction into play. Darren will show you how that works. So even the application itself, there's still a little uncertainty out there on whether that's going to hold or not. But for now, I think it will. I don't think because people have submitted applications using that application, I don't think it's going to change. So another factor to consider as you're thinking about forgiveness is, are you complete? We'll touch on this a little bit later in the forgiveness application of what needs to be attached and what needs to be kept for records. Dan will go through that, but I just know you should not be submitting until you think you're pretty well lined up with internal support that you're supposed to have on that application. And on the need for the loan in the first place. So and in some cases, the documentation, even though you might not have an FTE reduction or something like that, you still have to submit all this documentation. It can be a formidable task. One lender early in the forgiveness timeline told me that they got their first loan submitted to them, or loan application submitted to them, and there was 2,000 attachments by that borrower to that loan application, and that the bank is required to go through, look at those, and as they determine whether they're going to forgive the loan or not. And that's just the ones that were attached with the forgiveness application. The borrower had probably a lot more documentation in their files than that. So it's something to not take lightly. I think we'll talk in a minute about audit process, and so make sure you're complete when you're ready to submit. Touching on the approval process with regard to what is that process, what is that timeline? I think everybody needs to have that good understanding of that, particularly as it coincides with tax planning and some of the other things. But once you submit a completed application, the lender has 60 days to approve that application. And I use the word completed application because you may submit an application and it may come back to you from the lender and say, we need a little bit of a tweak here or change here or something done. And they don't, most lenders are not taking their first application and say, well, you submitted and now we're going to look at it. They're taking a good look at it first before they determine when their 60 days starts to run. Once that approval process is obtained by your lender, then they submit to the SBA. The SBA has 90 days to approve it from then. And if it gets officially bounced by either the lender or the SBA, probably more importantly the SBA, you do have appeal rights to go and ask them to reconsider that. Maybe seeing we haven't gone through this, we don't know what that process will look like or what that's going to entail, but there is an appeal right. So again, the timing and the approval process will impact some of your other planning. Make sure you're aware of it before you submit. I wanted to touch on sailor merger. As we've seen changes and clarifications on the PPP loan for many, many weeks and months, we saw some just as recently as a couple weeks ago, a few weeks ago, and in October, the SBA issued a new interim rule regarding a sailor merger. And guess nobody had thought about this before, but if a borrower took out a PPP loan and then subsequently decided to either buy or sell all or part of their business, the ramifications to that PPP loan needed to be reviewed and talked about. So the SBA, better late than never, came up with a requirement that any sailor merger under certain criteria needed to be reviewed, and in some cases it would be subject to their approval, and that's generally more than a 50% sailor merger transaction, sale of assets or a merger, where more than 50% of the stock changed hands. And so be aware of that. If you're in that situation, it could definitely impact your forgiveness. Your forgiveness application will not even be valid because the SBA needed to approve. And it would only be for transactions that are subsequent to the date they issued this interim rule. So I just wanted to make everybody aware of that, but it only affects a few people. We talked about the audit process. It is something that has probably created more anxiety than anything else for borrowers under the PPP program. Is somewhere well after you borrowed the money, now it became known that they were going to maybe audit you. And so the timing of it was unfortunate, but it is what it is right now. The SBA has said that all loans over $2 million absolutely will be getting an audit at some point in the future. And so those loan applications, again, should be pretty tight and buttoned up before you submit, because you're going to get looked at. Loans under a certain threshold are likely not to be audited. That loan threshold will probably be, go back to this slide, Erica, the one before this. The loan, loans in the $50,000 to $150,000 are probably the likely candidates that are going to get escape from any audit requirement. Both the House and the Senate, in their stimulus bills that they have in stalemate right now, have provisions in the bills for taking certain loan sizes that are on the smaller side and exempting them from the audit process. Loans in between, that lower level loan or lower amount loan and the $2 million loan will be subject to audit at the discretion of the SBA. We don't have a clue what that means, and no guidance has been given. But I do want to note in the audit process, there's 6 years after you submit the forgiveness that they are asking you to hang on to the documentation. So our presumption is that the audit process could take place anytime during that 6 years after the forgiveness application is submitted. And in some of the guidance they've given, there isn't a lot, but they said the things that they will focus on, obviously, is were you eligible in the first place? What was your need? Did you really need the money? And I'll talk about that next. The amount of the loan, did you use the loan the right way? And then they want to review your calculations on the applications themselves. So, so that's about all we know on it right now, but just be aware that there will be still some anxiety. You get yourself forgiven, but now you still might be subject to audit later. So the loan necessity issue has taken a new twist. Just last week, we had a bunch of lenders and borrowers talking to us about something new that developed. The SBA has developed a new form, the forms 3509 and 3510, and they are basically a 10-page loan necessity questionnaire. The two forms are, one is for-profit industry and one is for nonprofit industry, but they're generally the 10 pages of questions are very similar, but they take a deep dive on whether or not you needed that loan in the first place. So we are starting to see where the SBA is going to focus some of their audits and some of their reviews. So what those forms are required, we've been told, are going to be required for all borrowers when they submit their forgiveness application for everybody over a $2 million loan. The lender is supposed to give these forms to the borrower, and then they have 10 days to fill out these questionnaires. And they're very extensive, and there's a lot more supporting documentation that has to go with them. So we do have drafts of those questionnaires available if anybody wants to see them. We've given them to some of our larger loan clients to get ready to start answering these things, to do the homework, that type of thing. So if you want to take a look at that, let us know. One thing, as we looked at these questionnaires, it's a little concerning, and our AICPA, our profession, has also been lobbying as soon as they came out to simplify or to direct the questions a little differently on these questionnaires. But they appear to be focusing on the need of the loan in the present tense. And I just want to remind everybody that the present tense might be totally different than back in March and April, when you applied for the loan and the economy was shut down and you did not know how bad it was going to affect your business and what was going to happen and the things that you were going to have to endure. And so we are emphasizing that you really put a lot of work into documenting what was going on at that time as you looked at your business and the prospects for the future, and then answer that loan necessity questionnaire accordingly under those parameters, rather than thinking about today. Because we've had a lot of clients that it got really bad, it got really ugly, and then in some cases it's gotten better. And if you answer that loan necessity questionnaire in the context of the better, you might be getting a knock on the door a little earlier from the SBA want to know, why did you need the loan in the first place? So just wanted to touch on that. Assistance, I just wanted to touch on this. We're seeing some lenders a little bit reluctant to help the borrowers fill out the applications. So I've had some clients tell me that they're concerned that they're not getting the help they need. Yet, on the other hand, lenders have been very helpful if they see that it's an incomplete application, to say, you know, you need to do some more work on this, and here's where. They just don't want to be the one doing the work, and that's probably natural. They have to approve the loan, so they don't want to be approving their own work, but they are trying to make sure you do the right amount of work to get it through their process and through the SBA's process. So it's a balancing act right now. So we've seen the banks lean on us more as CPAs, not necessarily just our firm, but the profession. They're pointing a lot of their borrowers to the professional help that they can get to fill this out. And believe me, because it's been months and months and weeks worth of changes, there is still a lot of confusion by our clients in filling this application out, or things that you thought you knew, you don't quite remember the way they're really working and that type of thing. So get the help if you need it. It's complicated stuff, and we just want to make sure that you reach out and get some help from your CPA or somebody else qualified to help you. So lenders, I just touched on them, but lenders also, some lenders aren't even ready yet to take applications. Make sure you know if your lender's ready or not. Some of the reasons they're not ready is the software build out to submit these applications has taken many forms. Some of the big banks did their own build out. Some of the smaller banks are relying on outside third-party providers for that. Sometimes the software build out didn't go real well, that type of thing. So there's no common one process submission process that everybody's taking. And so some lenders aren't quite there yet, but I'd say most of the lenders we've talked to are ready. But just make sure you know before you submit. The last thing I want to touch on is something that happened last week in November. Was that November 5th or the week, just a little bit before that, a week before? There was a court case that was decided. It was a federal court case on appeals, ruled against the SBA, and it is now requiring full disclosure of PPP borrower information. So I think your loan information will likely become part of a public record, your company name, the amount you borrowed. The most concerning thing that we also think is going to be made aware or will be public is your head count, your FTE numbers. And so that could be a competitive issue, but again, that is something to be aware of, and probably not much you can do about it at the present time, but I want to make sure everybody is aware of it. So these factors are just some of the highlights we chose to talk about today. There's a lot of other things that go into this. Like I say, if there's other questions that come up, please let us know, and we'll try to answer those questions. So Mel, you want to transition it to Dan?
Sorry, yeah, thanks, Rick. Yeah, and Rick, keep an eye on the Q&As down there if there's anything that comes in related to what you just talked about. But yeah, I can turn it over now to Dan. He's going to talk about the application forms.
Yeah, thanks, Rick and Mel. So to get into the details a little bit, as Rick mentioned, there's 3 forms available. There's the 3508S, 3508EZ, and the 3508. The S, or the simplified kind of form, is for borrowers that had loans of $50,000 or less, and along with their affiliates, had loans of less than $2 million. The original application form required you to check a box if you had affiliates, affiliated companies that you were organized with, that in total, if you were, again, more than $2 million, you won't be able to use the 3508S. That form requires fewer calculations and also some less documentation. The 3508EZ is for self-employed, independent contractors, or sole proprietors with no employees. So if you're in that bucket, that's probably the form for you, or for businesses that had no wage or FTE reductions. There's also a FTE safe harbor operating restriction that may apply, and I'll get into that in a little bit. And then obviously there's the 3508, that's the full forgiveness application form. That's going to be for all other borrowers that don't qualify for the S or the EZ. Those forms are located at the website below, and I'm gonna go to that website in a little while to just kind of show you what the forms look like. But that's at the treasury.gov website. So kind of to walk through the decision tree on how to decide what form to use. We kind of put this together along with kind of the AICPA, but if your form or if your loan is less than 50,000 or less, and again, you have loans with your affiliates of less than 2 million, you can use the 3508S. If the answer is no, you have to go over to determine if you're a self-employed. Without employees, if that answer is yes, you can use the 3508EZ. If no, again, you're a business that maybe had a loan of more than 50,000, has loans with affiliates more than 2 million. Again, you're not self-employed, you come over to this category. If you are a borrower that reduced your employee's pay rate by more than 25%, then you're going to be required to use the 3508. If no, you would look at if you had a reduction in your FTEs. So if the answer to this question on the 25% is no and the FTE reduction is no, you can use the EZ form. If you had a reduction in your FTEs, but you qualified under the FTE safe harbor operating exception, so your answer to this question would be yes, you can use the 3508 EZ. Again, if no, if you had a reduction in your wages or in your FTEs, you're going to be required to use the 3508. That FTE operating restriction safe harbor that I'm mentioning, basically, if you were unable to operate between February 15th, 2020 and the end of your covered period at the same level of business as before February 15th, 2020, and you were doing so following the requirements established by any one of these three entities, the Secretary of Health and Human Services, the Director of Center for Disease Control and Prevention, or Occupational Safety and Health Administration. And that guidance was issued by one of those three governmental entities, and it was issued between March 1st and December 31st, and was related to maintaining standards of sanitization, social distancing, or any other worker or customer safety requirement. So certain businesses probably will fall under this guideline in which maybe they had FTE reductions, but fall under the safe harbor operating restriction. And so, you know, if I back up a slide, they may fall under being able to use the 3508 EZ. But you're going to want to make sure that you have this properly documented and, you know, what guidance you were following if you determine you should be using that. I'm just going to slide in here. So this was the website I was mentioning, the U.S. Department of Treasury website. Under that, if you click on the link that'll be provided, you get to this page. And then if you just scroll down, there's a section for borrowers and a section for lenders. You want to look under the borrowers, and you'll see the three forms will be in here. So here's the loan forgiveness application form instructions for the S, the actual form itself, and then there's instructions for the EZ, the form itself, and then this would be the application for the 3508. And I'm just gonna kind of walk through these briefly to kind of give you an introduction to each form. The 3508S, as I mentioned, is the shortest form. It's only 1 page long. All 3 of the forms are gonna require kind of this normal documentation, business legal name, address, your tax ID number. They're going to require the SBA loan number, the lender number, and the lender number, your PPP loan amount, the date you received your PPP loan funds. All 3 of the forms require employee count at the time of the loan application and the employees at the time of the forgiveness application. And then if you had any of the idle or economic injury disaster loan advance amounts, you'd have to include that information here as well. Again, this form being the shortest of all of them doesn't require any calculations or anything on it. You would just list out your forgiveness amount. And then all of the forms require the authorized representative that is signing off on the form to make representations. And those representations are similar to the ones you would have made, you know, again, with the original application form, somewhat different, but there's like 7 or 8 representations that are going to be required to be signed, and then a signature. And again, this is the shortest one, a 1-page form. The 3508EZ, again, is going to look very familiar with the top section, identical. You'll get down to the payroll schedule. You'll need to select, you know, which type of payroll you have, your covered period that you are using, and then also if you're selecting to use an alternative covered period, to include that as well. Again, if you are you and your affiliate companies have more than PPP loans exceeding $2 million, you have to include or mark that. And then basically on this form, you would just need to list out your included costs, your payroll costs, mortgage interest, rent or lease, and utility payments. Pretty simple, you know, fill out those 4 lines, you add that together, put on line 5. You indicate your PPP loan amount again, and then you take line 1, which is your payroll costs, divided by 60% to ensure that you're exceeding that 60% of your funds that you used were for payroll. And then basically you include your forgiveness amount, the amount you're applying for. So again, that's basically a 1-page form. The second page includes, again, those representations that are going to be required by the person completing the form. There are a couple different representations, but for the most part, the same. I apologize. The last form, the largest of the 3, the 3508, looks similar. Again, in the top, same required information as the EZ form. But when you come to fill out your payroll costs, you'll see that it indicates it's coming from a PPP Schedule A, line 10. So there's a second kind of, I'm just going to scroll down to the Schedule A here. This is a second form that kind of goes along with it. Actually, there's a Schedule A and a Schedule A worksheet. The Schedule A, so a number of the lines on the Schedule A come from the Schedule A worksheet. And I'm going to scroll to that, then I'll circle back up. The Schedule A worksheet basically is just a list of all of your employees, their identification number, the compensation amount, you include the FTE amount, and then if there are any salary or hourly wage reductions. The table 1 is for all employees that had an annual salary of 100,000 or less in 2019. And then there's also a table 2 in which similar information, but this is going to be for your employees that had more than $100,000 of annualized wages in 2019. Likely it's going to require, I mean, Darren's going to have an example here that's going to, require, if you've got more than a few employees, you're probably going to need to create or have a separate table that'll include this information. So to scroll back up to the Schedule A, you've got your cash compensation from the worksheet, your FTEs from the worksheet, any wage reduction from the worksheet. So most of the information here is coming from the worksheet. Again, Table 2 from the worksheet, and then you would include any other payroll costs, which include the health insurance, retirement plan amounts, and then also some state and local taxes can be included. Owner compensation treated a little bit differently. That's included on a separate line. And then this larger form, the 3508, also requires the calculation of the FTE quotient. So this will kind of factor in if you potentially have a reduction in your loan forgiveness amount. So most of the information from Schedule A then we'll circle back up to the kind of main form, and you'll fill it out very similarly to the other ones. So I just kind of wanted to give you a brief overview of what those forms look like. And I'm going to go on to talk about the documentation required to be submitted. So all of the forms require the same payroll information to be submitted. That includes bank statement or third-party payroll provider reports documenting the amount of cash compensation paid to employees. For those of you that do have are using third-party payroll providers, I know some of them have come up with reports that you can probably dive into that should be able to help you with this process. If you're doing your payroll internally, you're going to kind of have to develop those reports to calculate the information. All of the forms require tax forms to be included for the overlapping that overlap your selected cover period. Those tax forms being the IRS quarterly 941s and state quarterly wage and unemployment insurance tax filings. So both of those things will need to be included, as well as payment receipts, canceled checks, or account statements reflecting employer contributions to health insurance and retirement plans. So if you're including those amounts along with your application form, you would need to have supporting documentation for that as well. The 3508 form requires some additional documentation regarding the FTE calculations. So with that, you have to select a look back period, that being either February 15th, 2019 to June 30th, 2019, or January 1st, 2020 to February 29th, 2020. So you would have to have supporting documentations that provide the calculation of the FTEs, and I think Darren has that in his example that he'll go through. If you're a seasonal employer, you can use either one of the two above, or you can use any consecutive 12-week period between May 1st, 2019 and September 15th, 2019. So again, if you're seasonal, it may benefit you to take a look at that. That is, again, this is only required for the 3508. However, the 3508EZ also requires you to include the average number of FTE employees on January 20th, and then also the average number of FTE employees on the last day of the selected covered period. For non-payroll documentation, again, this is required to be submitted for all forms. each one is kind of similar, but for mortgage interest, you are required to submit a lender amortization schedule and receipts or canceled checks verifying payments during the covered period, or lender account statements between February 20th and through 1 month after the covered period, verifying the interest amounts and eligible payments. The rent and or lease payments, very similar, a copy of the current lease agreement and receipts or canceled checks verifying payments during the covered period. Or again, a lesser account statement from February 20th through 1 month after the covered period. And then utility payments, copies of invoices from February 20th through the covered period, and receipts, canceled checks, or account statements verifying the eligible payments. So that's the documentation that is required to be submitted. Each one of the instruction forms, have these items listed in there as well. Documentation that the borrower must maintain. So these are things you have to, have available, but not required to be submitted. All records relating to the PPP loan, including documentation submitted with your original application, documentation to support the borrower's loan forgiveness application, and then also documentation supporting material compliance with the PPP requirements. All records have to be maintained for 6 years after the date the loan is forgiven or repaid in full. So please keep that in mind, that there's a 6-year kind of limit or time frame on that. And then you must permit an authorized representative of the SBA to access such documentation upon request. So kind of as Rick was mentioning, either under audit or under request to see additional documentation, you'd be required to provide that to the SBA. And then again, just to wrap up, some of the other documentation the borrower must maintain. Documentation supporting the borrower's certification that annual salaries or hourly wages were not reduced by more than 25%. So likely you'll have this as you look at that calculation, but you're required to, maintain that, but don't have to submit it. Documentation supporting the borrower's certification that the borrower did not reduce the number of employees or average paid hours of employees between January 20th and the end of the covered period. So again, that relates to the FTE calculation. And then if you have any of the FTE exemptions, you'd want to keep or have on file documentation regarding any employee job offers or refusals. So that's an exemption that Darren might get into as he does his example. And then lastly, I kind of mentioned this is related to the that safe harbor provision, but if you are following that safe harbor provision or utilizing that, you'd want to have documentation as to what guidelines that you were required to follow. And as I mentioned, all of the instruction forms include a list of the documents that you're required to submit and also the documents that you have to maintain on file. So with that, I'm going to transition it over to Darren to kind of walk through an example. And his example, I believe, includes kind of the main form or the 3508.
Darren, I don't know if you're talking yet, but you might be on mute.
I know it's only been 6 months and I still can't remember you got to unmute yourself. So can you see my screen, Mel?
Yeah, we're good, Darren.
All right. So what I did is I put together an example here of the loan forgiveness application. So you can see the first part is just the stuff that Dan referred to with specifics about the company and the loan amount and things like that. The first line here on the application is a payroll cost. And this is where we talk about the Schedule A's and the supporting schedules for that. So we'll talk about the payroll cost first. So this is the application Schedule A, and it breaks it down into, I have 3 tables on mine. The first 2 are the ones Dan talked about. Table 1, which is for all employees that made less than at the $100,000 in 2019. Table 2, which is for employees that made more than $100,000 in 2019, and then also compensation to the owners. So if you go to my Schedule A worksheet here, basically you'll see my table number 1 where I have all my employees listed. The one thing that I don't have on here is one of the things Dan said is required, and that's a specific identification number. But for this meeting purposes, I took that out of the spreadsheet. But you can just see for the 24 weeks here, I just have calculated or entered what their payroll is for each 2-week period for the individuals in Schedule 1. And then for the individuals in Schedule 2, Table 2, for those that made over $100,000. And then in this case, the S-Corp owners. So then this just carries across, and basically in Table 1, I don't have any reduction amounts, because if you remember, the amount that is eligible, that can be expensed for any employee for eligible expenses, is limited to $46,154 for employees that make more than $100,000. And it's also limited to $20,823 for owners of the company. And that's if you're electing a 24-month period. If you're doing an 8-month or 8-week cover period, then those numbers go down accordingly based on the math. So you'll see here where these individuals were all making more than $100,000 annually. So I limited or reduced their comp to $46,154. And then for the owners, I reduced it to the $20,000. So that's important to remember as you go through these calculations to limit that compensation. Otherwise, you will get it back from the bank upon their review to do that. And then you can see here that I also have the average FTEs for each one of the employees. And I'll get back to that calculation in a little bit, but just keep walking through the Schedule A. So on the Table 1 total, if you look back, I had 687,500 of qualifying payroll for that. And I had an average FTE of 24.7 FTEs for my covered period. Then you also have to include your salary and hourly wage reduction. For this particular example, I did not have a reduction to do that. But if you remember from the form that Dan was talking about and from prior webinars, that's another reduction that's in place, that if you decrease the salaries or hourly wage of your employees by more than 25%, your loan amount or your loan forgiveness amount could be forgiven by that amount as well. I'll be honest with you, with the ones that I've been looking at, because of the change that you can use a 24-hour or a 24-week period, this really hasn't come into play that much on the calculations that I've been looking at. Most of the compensation costs are so much higher because of the 24-week that hasn't been as big an issue. The next on line 4, that again just comes from my schedule. That's the 321,000. That's the limited amount for each one of the employees that were making that made over $100,000 in 2019, and that had an FTE of 7 FTEs for the period. So then the next part of it is the non-cash compensation payroll costs. So these are the other payroll costs that we've talked about. And if you see here, I've highlighted a couple of things because I think it's important to remember that, for this employee health insurance, it's paid or incurred. So there's circumstances where you can get more than 24 weeks of health insurance because it's paid or incurred. So it doesn't have to be paid in and incurred in your cover period. It has to be either one or the other. So you can see I highlighted that in red for the health insurance, the retirement plan contributions, and the unemployment taxes. And then I just made some notes over here in red too, because these are some things that we've had questions on as we've worked through these or in prior webinars or just in internal discussions to make sure we're making sure we're doing correctly. So the health insurance amount should only include the amount that is paid by the employer. The employee amount, the amount that the employee paid by having it withheld from their payroll should be included up in either line 1 or line 4 because that's part of their gross compensation that was used to calculate those amounts. For the retirement plan contributions, again, that should only be the employer contribution, the profit share, or the match in most cases. Because again, any amount that was deferred out of the compensation of the employees would be included up in line 1 or line 4 as part of the gross compensation paid to those employees. Line 8 here, I think it's just important to know that at least in most states, this is just the state unemployment because the federal unemployment does not qualify and cannot be included in this line. It is not a qualifying expense for your loan proceeds. So I just want to make sure to point those out as they're things that have come up in prior seminars. So then this line 9, that is my owner amount or self-employed individual. And you'll see there is no FTE amount for there. I guess they're just assuming the owners are going to have the same FTE for either your reference period or your covered period, or you're going to leave for voluntary purposes. So then you get to your total payroll cost. And in this case, it's $1,233,000. And if you remember on my example, my total loan was $1 million. So what some clients have done is they get to this payroll cost and they go, okay, well, I spent more than my loan proceeds. And when we get to my FTE calculation, I have FTEs that if you take it against my compensation cost alone are going to be in excess of my loan. So they've only filled out the application using payroll cost or cash compensation costs and still received 100% forgiveness. And one of the reasons they've stopped and not completed the rest of the information on the application that Dan talked about with mortgage interest, rent expense, and utilities is then they don't have to provide the 2,000 pages of information, supporting information that Rick was talking about. They just purely have to provide the support for the payroll costs, which has made it a lot less burdensome for them. And banks have been accepting of stopping at payroll cost if it gets to full forgiveness and not requiring the rest of the form to be filled out. So this payroll cost then carries forward from your Schedule A to line 1. So that's where the $1,233,000 comes from. And then there's the other 3 non-payroll costs that qualify for or are qualifying expenditures for your loan proceeds. The first one being the business mortgage interest payments. And on the side here, I just put some clarification because in prior webinars, one of the questions we received is, what is mortgage interest? I think, I always think a mortgage interest is related to real estate because you have a mortgage against it. But there was debate internally in our firm and also I think out on the internet as what mortgage interest meant. but the SBA or Treasury has come out and clarified that. And basically you can include interest paid on all loans in place prior to February 15th, 2020, if secured by real or personal property. So any interest payments made during your cover period on loans that are secured can be included in this and are considered an eligible use of your PPP loan proceeds. You have your rent and lease payments. So this has been one that we thought there was all kinds of clarity on because it's rent and lease payments, but then not so long ago, the SBA came out and gave us some guidance that says that if your rent payments are to a related party, only the portion of the rent payments that is equal to mortgage interest payments made on that real estate are includable or eligible uses of your PPP loan. So if you pay a related party rent of $20,000 a month, but the related party doesn't have a mortgage on that property, none of that rent would qualify as an eligible expenditure of your PPP loan fund. So I think if you're having to use rent expense and you have a related entity as your landlord, as many of our clients do, because that's a common way to set up your business, just make sure that you're limiting that to the mortgage interest paid, not the full amount of the rent. And then utilities is just the utilities amount that you're paying on your stuff. So again, you go through line 5, and that's that 25% of salary and hourly wage reduction that I did not do. And you go, okay, so then you add up all your amounts, 1, 2, 3, and 4. And in my case, I have $1,453,000. And when we get to my FTEs, I have a FTE reduction of basically 4%. So I have a quotient of 96%. So that's my modified total is $1,394,000. And this is part of the issue that Rick was talking about is most of us, when this CARES Act came out, thought if there was going to be a reduction, if you had a reduction in your FTEs or had salary and wage reductions in excess of 25%, you were not going to get full forgiveness of your PPP loan. But as you can see from this form, that even though I have a reduction in my FTEs by 4%, which gives me, I still have more eligible cost at that reduced rate than my PPP loan amount. And it allows me to have 1 million of forgiveness, full forgiveness. So that's a pretty significant change that came out. I think it was in June or July when these forms first became available. That was I think a little bit surprising to people that had been involved in reviewing these PPP loans since the CARES Act. So I guess the main point is to know is that even though you did have a reduction in your FTEs during your cover period, you can still obtain 100% loan forgiveness. And most of that is because they have given us the 24-week cover period that has allowed us to accumulate expenses significantly higher than the amount of the PPP loan. Because if you remember, the PPP loan was on the application, you got basically 2.5 months of payroll was the amount of your loan, where, 24 weeks is, 5.5 to 6 months of payroll that we get to use to calculate our forgiveness. And then the other point on here, and with the application of the 24-week cover period, we haven't seen this be as big an issue. And the SBA also did us a favor when they said the payroll costs have to be 60% of the cost spent on your eligible expenses. If you remember, originally the payroll costs were going to be required to be 75%. Well, not only did the SBA come out and extend it to the covered period to 24 weeks, they also changed it so that only 60% of the costs need to be paid used on payroll, not 75% as initially set out in the CARES Act. So that's the walk through the calculation and some of the different stuff to make sure we're keeping note of. And I just want to make sure that everybody kind of hears that for the most part, what I've seen is if the payroll costs get to a point of full forgiveness, the clients are not going on and providing the information for the other expense categories, mostly because they don't want to have the burden of providing that information to the bank. And my experience is that the banks have been allowing them to stop at the payroll cost and provide that supporting document. So now I'll go to the FTE calculation, which in all honesty is probably the most burdensome part of the whole calculation, because most of the information, we can get pretty quickly from our accounting records, and hopefully most of you have been using either the tool we provided in one of our first webinars or another tool to be tracking these expenses since the loan proceeds were received for most people back in April and May. But on the FTE calculation, there's really 3 periods in which we have to calculate the FTEs, or the average full-time equivalents. If you remember, there are 2 reference periods, and we get to pick what reference period gives us the best answer. So this first part of the calculation is for my reference period from February 15th, 2019 to January 30th, 2019. And then we have another reference period that's the January 1st, 2020 to February 29th, 2020. And these are the reference periods that are detailed in the actual law. So they're not reference periods that we get to choose. They're the ones that we have to use to calculate our average FTEs when we calculate our change in FTEs over our covered period. So then here I have my average FTEs by week for my 24-week covered period. So for each week, I have to go in and put down, if they're there, what the FTE amount is for that week. And remember that your FTE cannot exceed 1. So whether you put 40, 44, 100, it doesn't matter. If you put 40 or more hours in a week, your FTE is a 1. You cannot go over a 1. And your other FTEs are calculated based on dividing the number of hours worked by 40. So 36 hours would be an FTE of 0.9. So as you can see, I've got my FTEs calculated for my reference periods. And then you get to select what reference period you want. And you would want to use the reference period that has the highest FTEs, because that's what you're going to compare your current FTEs to see if you have a reduction in FTEs or not. And then you have your FTEs for your covered period. And then over here, if you remember, Dan talked about there's some exemptions. So I had 2 employees that had exemptions, and basically the exemptions I'm talking about is if you have an employee that voluntarily leaves the company. So if a employee, quits, retires, needs to take a leave of absence because of COVID-related issues with themselves or at home, if that's the case, then we still get to include that as an FTE of 1 for the covered period, as long as that individual was not rehired, or an individual was not rehired for that same position. So for this individual, I say their average FTE for the covered period is 0.17, but I say it has an exemption because they retired during the covered period. So I don't have to take that as a reduction in my FTEs, and I can count that as 1. So for my covered period, I have a average FTE of 31.67 for my covered period. So if you remember back to when this FTE concept was first introduced, the SBA also provided us a simplified method, they called it. So if you go through this calculation, employee by employee, doing the math to get to, 1 or 0.39 or 0.8, and you don't get to full forgiveness, you can also use the simplified method. And basically what the simplified method does is it requires this same calculation for the reference periods and the covered period, but it simplifies it by saying you're either a 1 or a 0.5. So if you worked 40 hours or more, you're 1. If you work 39 hours or 1 hour or 20 hours, you're a 0.5. So you can run this calculation the same way again to see what your FTEs, average FTEs are for the covered period as well as for the reference period to see if that gives you a better answer on your reduction of FTEs. So once you get the FTE calculation done, you go back to Schedule A, and that's where we calculated the amounts from the tables for the 3 different types of employees. But on Schedule A, hopefully we read this before we went through the calculation to calculate the FTEs that I went through, because there are 3 things that if you satisfy any of the following 3 criteria, you can check a box and skip lines 11 and 12 and put a 1 in line 13, which basically means the FTE calculation doesn't need to be done and you've met one of the 3 safe harbors where you just don't have to worry about the increase or decrease in your FTEs from the reference periods to the covered period. So if there's no reduction in your employees and the average pay hours, you can do 1. So if you've had the exact same head count and you haven't reduced their salaries at all and they've been working the same number of hours, you don't need to do it. You can just enter 1 and not have to go through that whole FTE calculation. Then there's the FTE reduction for the safe harbor. That's the one that Dan was talking about. If your business was shut down due to rules put in place by one of those 3 governmental agencies, then you can also qualify for that safe harbor. And then there's the safe harbor for reduction. Then there's the 3rd one there for the safe harbor. So if you don't qualify for one of those 3 and you had to go through the FTE calculation, then there's this calculation down on line 11, 12, and 13, where it takes your average FTEs during your chosen reference period. That's where we did the math on the 2 and we chose 33. And then our total average FTE for, which is just the addition of these, because this 24.7 and 7.0, it comes from right here, but it's also linked back here on your schedule, your worksheet, where it's 24.7 and 7. And then, so then you get your quotient amount, which is 96% basically, which then flows through to the front schedule and does the calculation kind of up here where on the front page of the application. So I guess, the forms walk you through this pretty well. I think there's just some things that we got to be aware of as we go through these. And I think the FTE calculation is the most burdensome, just because, if you kind of have to do it for all 3 periods. We have to do it for 2 of the 3 for sure. And if you don't get the right answer, the answer you want, you have to do it for the 3rd period. And technically, you're supposed to calculate your average FTEs based on your FTEs on a weekly basis. So sometimes that gets a little cumbersome with the payroll reports that are received from our payroll companies and things like that. So I don't know if Rick or Danny have anything to add on that, or Mel?
Darren, there's one outstanding question that kind of relates to what you just were talking about. When calculating our costs for the PPP loan, how do you recommend we handle deferred costs? This points to the question of incurred versus paid costs and how those are handled on the application. You kind of went through that. Maybe you could touch on it again.
Yeah, and I'm not sure what deferred costs are, but I mean, if in the instructions, there's kind of rules as to what paid and incurred means. So, I mean, it doesn't allow you to accrue, you know, significant bonuses on your books for that period and then pay them, you know, 2 years from now and say, hey, they were incurred during this period. There are rules that say, you know, yes, if the payroll was incurred during this period, but it has to be paid with the next normal payroll period. Or for like utilities, it says, yes, if they were incurred during your covered period, they can be included, but they need to be paid in the normal course of business or when due based on the invoice received. So there are rules within, I think they're in the instructions based on the different expense amounts that, you know, there are limitations as to how long it has to, or how long it can be until they're paid.
Hey, Darren.
Yes.
I had something else too, just to maybe clarify a little bit. You would mention how if they went through this and they had enough payroll costs to cover and get 100% forgiveness, you could skip providing the supporting documentation for the other expenses. And you've seen some banks be okay with this, but do you think it might be prudent if somebody gets to this point to maybe check with their bank? Because we've seen different banks look at this differently and they might kick it back if you didn't fill out everything. I don't know. What do you think about that?
Yeah, no, I agree with that 100%, that you should check with the bank to make sure that if you stop at payroll, they're not going to consider it an incomplete application. But I guess my experience with a handful of banks that I've worked with, they have all been okay with just stopping at the payroll cost. But I think walking through this application with your banker is a good idea, because to submit it with all the correct information and incomplete in how your banker wants it is going to expedite the process. Because as Rick said, I think it was Rick, the bank has 60 days to review it and the SBA has 90 days to review it. So anytime there's I guess a hiccup, that just extends the period longer from when you're going to find out if it is formally forgiven.
On that point, I sat in on an AICPA webinar last week, and the head guy at the AICPA asked Treasury that same question, Mel, and they encouraged borrowers not to submit that information just to kind of cut down on the paperwork. So there was guidance at a very high level given on that issue. And I just want to also point out that, yeah, the banks have to approve this, but I've run into 2 or 3 instances in the last couple of weeks where the banks have it wrong on some things. So they were asking a couple of borrowers or a client of ours to do some things that were not right. And so we had to get on a call with the banker and take them through the applications and the instructions. And we showed them why they were wrong in their interpretation. So just be careful a little bit, because it's so confusing that even the lenders don't necessarily know sometimes what they're up to. So.
And Rick, if I could just circle back to one thing you mentioned in the beginning about taxability, that the timing of when it's going to be picked up as taxable income or non-deductible expenses is a little bit fluid, and you have, I suppose, a little bit of control over that. But if we have seen clients already get official forgiveness of the CPA or the SBA, and if they get that prior to the end of the year, isn't it your position that you really don't have any choice at that point, that it does end up on your 2020 return?
Yeah, it's highly likely that that would be the rule they'd follow. We haven't seen that officially, but that's what I would presume.
Yeah. And I guess I just had one other comment about Dan's presentation, that I think he thoroughly went through this. Maybe it's worth emphasizing again, Dan, but even if people are fortunate enough to use the EZ form or the one-page S form, which is simplified, you still have to submit plenty of documentation. And even if you don't have to submit it for some of the other costs, you need to maintain it, right, Dan?
Yeah, that's correct. I mean, the documentation for your qualifying expenses is basically the same for all three forms. It's the FTE calculation that's required to be included with the full application form. That's pretty much, simplified answer.
Okay, thanks. Well, I think we're done with the formal presentation, and I don't know how we're doing on.
No,
Yeah, go ahead, Rick.
there was one final slide, or we don't have to put it up or anything, but I just want everybody to be aware that in Congress, there's pending stimulus relief coming on both sides of the aisle. And when that comes and what that will look like, I don't know, but I anticipate it's going to have some more clarification of the previous PPP, and they are talking about a round 2 of PPP for certain segments of the industry and the economy. So we should just be on the lookout for those types of things, and we can talk about it as it develops. But there will be more to come on this. And I also just wanted to, as we finish talking here, there's about 7 or 8 questions that have just come in. We're out of time, but we will definitely answer those, get back to you on those. And if there's anything else that comes to mind later today, tomorrow, in the middle of the night, just feel free to shoot us an email and we'll try and get an answer.
Steve and Therese, thank you for having us again. And I don't know if there's any closing comments either one of you want to make.
I would just say thank you. Thank you to the LB Carlson team for going through the details and trying to simplify it. I know there's a lot of confusion out there and there are a lot of questions, and helping our members to know that being patient and going through it and doing it accurately is better than rushing through and trying to get it done quickly. So we appreciate you digging through this. We'll make sure that when we send out the slides and the link to the recording, that we add in answers to these questions from the LB Carlson team. So if you didn't get your question answered, or you're interested in the answer to these questions that are left, they'll be in the follow-up email that we send to you. Thanks for taking the time today to get on here. Steve, did you have any additional comments?
Other than to make sure that all the attendees reach out to your respective association leaders if you have other questions that are unrelated to the PPP that you want to see us taking on in future financial executive meetings. So looking forward to hearing from you and of how else we can help you as you kind of negotiate the next stages of our recovery. But thank you,
everybody.
Thank you, Mel and team.
Thank you.
Fantastic, guys. Amazing information. I know it was incredibly valuable.
Thank you.